Hi everyone, quick video to analyse Amazon's results that were released post-market today. So as you can see from the title of this article I saw on Yahoo Finance a couple of minutes ago, holiday sales forecast suggest that the boom is over for Amazon, the boom from 2020. I think that's a rather dramatic title. The numbers simply do not say that. So we're looking at a 4% drop. Amazon this year, after this, will be roughly flat. Of course, these numbers haven't taken into account the drop yet. I'm expecting that this drop might even get worse tomorrow. I'm not a fan of these rules in general. If someone was sitting on the sidelines on Amazon, I can definitely see this as a buying opportunity. I don't need to espouse to you the merits of Amazon. We all know what a company Amazon is, and I've made a video in the past on why I think Amazon is extremely undervalued. I mean, we're looking at a company that's 3 times sales, or well, 4 times sales for the numbers that it puts up regularly. This is an off quarter because it had a lot of pull forward during 2020, and that's to be expected, as we've seen with a lot of other companies. But Amazon is an exception. So just to clarify, the results weren't good. EPS missed by roughly half, so down 50% versus expectation, and revenue missed slightly by about, well, I say slightly, by about $1 billion. But for Amazon, that's, not that much. That graphic is from Earnings Whisper. It's a website I use quite often if anyone's interested. And additionally, they also mentioned, so this is what I was saying about the holiday sales quarter expectations. They're expecting to incur a lot of extra costs, basically because of labour shortages and mass increase to wages that they're having to put on. They're doing, I don't know if most people are seeing in their areas, huge bonuses, so $2,000-$3,000 bonuses for just starting, basically golden hello style bonuses just to get people through the door. And they're really going to struggle with seasonal workers this year, I think. That's in addition to supply issues and increased freight and shipping. Basically, the EPS kind of makes sense when you look at it in that light. It's going to be expensive, as they've mentioned. It's expensive in the short term, but it's the right thing to do. Just a little. So taking a deeper dive, looking at the headlines from the earnings report, operating cash flow down 1%. That's not that. There's not much to be said about that. Free cash flow down significantly, down to 2.6 billion from 29.5 million for the previous 12 months. As I said earlier, while that is a massive amount, that is to be expected in this current year. Supply chain issues, struggling with labour, increased wage costs, and also they've made massive improvements to the fulfillment process over the last 12 months to keep up with demand. So I'm not too concerned about that. Amazon's free cash flow will definitely return. Barely any shares increased. That's not really anything to talk about. Net sales increased 15% to 110 billion. Slight decrease to expectations as we saw earlier. Not the end of the world in my opinion. And operating income and net income both decreased, as mentioned earlier. So this is basically to do, all of this is to do with the legacy Amazon business, Amazon.com. In future years, in my opinion, if they remain as part of the same company, which is another topic entirely, Amazon.com is going to become less and less a factor in earnings reports, and it is all going to be focused on AWS. It's going to be focused on Prime Video. It's going to be focused on all the other business segments that Amazon has, and these are far greater margin, and ultimately are going to be the engine for Amazon's growth in the future. Amazon.com isn't going anywhere by any means. It's arguably the most important website in the world, but it's definitely not the driver of Amazon stock anymore. And AWS is still chugging along quite nicely. AWS continues to impress, hasn't really skipped a beat in the last year, up 39% year over year. Growth is accelerating. 39% is much better than the Amazon e-commerce business. And it just shows that this is now fast becoming the story and the growth story for the business. And in the future, if Amazon comes under regulatory pressure and it's spun off, I think this will be a tremendous company to own in its own right, and even better than the e-commerce business. It has unbelievable tailwinds. It's a market leader, and I'm not going to harp on about it too much because I mentioned this in a previous video. I just wanted to get ahead of the news. Stock's 4% down. I'm still long on the company. I believe in Amazon's prospects, particularly AWS. I think e-commerce isn't going anywhere, cloud computing isn't going anywhere, streaming isn't going anywhere. This is a mild bump in the road for an unbelievable company that will continue to be one of the top companies in the world. I have no doubts that this is a temporary bump in the road for Amazon. So thanks for listening. I appreciate if you could like and subscribe. Thank you.